Thank you. Calima relisted on the Australian Stock Exchange beginning of September, so it's essentially a brand new company. Came to the market with $7.5 million in cash, giving us an enterprise value of just north of $20 million. Developing a very interesting project in Canada, which I think you will agree by the end of the presentation gives us an excellent platform to deliver value growth. The management team behind Calima have been together for more than 16 years now. This will be the third company we've built together. We started with Fusion Oil and Gas, which was listed on AIM, and then went on to found Ophir Energy, which was listed on the main board here in London. And then once that was listed and off and running, the team of 5 geoscientists, as I say, we've all been together 16 years, slipped quietly out the back door and set up our own investment partnership called Havoc Partners. And the project we're going to talk about today was one of the projects that Havoc invested in back in 2014. The Montney in Canada has emerged as one of the top-tier resource plays in North America. Canada offers a stable investment destination, and we think this project offers an intriguing mix of low technical risk and yet still offering excellent upside. Company is 22% of the company is owned by the board and management, so that makes us strongly aligned with our shareholders. The Montney, it's a big play both geographically and in terms of its resource numbers. Estimated remaining potential, 450 TCF of gas, 14.5 billion barrels of condensate, and more than 1 billion barrels of oil. It's the first thing to note is everyone talks about shale plays. It's become synonymous with the unconventional play. This is actually a siltstone, which gives you better productivity than the shales. It's thicker than most of the other plays in North America, which gives you opportunity to do multiple horizontal wells from one pad. The nature of the rocks lend themselves to fracture stimulation, and the bottom line here is that gives you a very low break-even cost of around US $1.70 per 1,000 cubic feet equivalent, which is one of the reasons this has emerged as one of the top plays in North America. So it's a place where a lot of capital is being deployed. The next map we're going to look at is the little red box right at the top end of the play, and that is where we have built our position. Nowhere. There we go. Right. Top end of the play in yellow there. It's an acreage position of some 70,000 acres of drilling rights. And if you look at the peer group round about us, the first thing to note is that acreage position is comparable in size to all the peers round about us. We have a mix of private and public companies round about us. If you exclude some of the very big ones, such as Petronas, there's about $10 billion of market cap in the companies round about us. And that represents an expenditure this year into the Montney, just in our bit of the play, of around $1 billion. There's $5 billion over the whole play of expenditure this year. So it's a very active play. This is a place where capital is being spent in today's market. Very robust expenditure, which you compare that globally, it's very active indeed. Now, how did a little Australian minnow company end up at the top end of this play? Well, this is rather a busy slide, but this is what we invested in back in 2014. It's effectively just a geoscience mapping technique, and there's nothing revolutionary about it. It's really just an evolution of a technique that we use in frontier new ventures work all the time, common risk segment mapping. Normally we're doing it because we're in an area that is data poor, and we're using it to substitute for real data. The benefit here is that we had access to 1,400 wells. Now, while it was a very tedious job to condition those wells and do the evaluation, once done, it gives you a very powerful tool to make predictions. And the predictions that we are particularly interested here are the liquids yield, because it is the liquids in this play that make it economically attractive. Gas prices are fairly flat, but condensate up here sells at a premium to WTI. So if you can predict the areas that are liquids rich, then you truly are in the sweet spot. This is a map that when we showed our peers and some of the banks in Canada a few weeks ago, this map, they were particularly interested because it's a technique that they haven't seen done before. In green, you're seeing the liquids yield. The darker the green, the higher the liquids yield. And we've sort of draped it on top of topography, which is a little bit confusing, but focus on the green topography. Now, if we drape that on an acreage map and compare the two, where you see the green topography, that's all the hotspots in the play. That's where premium prices are being paid. And the thing that we noticed back in 2014 was that there was an area up in the north labeled there as Caribou, which had a high liquids yield. And at the time, when we did this mapping, there was nobody in that part of the play at all. It wasn't even recognized as part of the play. So we've been able to quietly, over 4 years now, build an acreage position without anyone noticing, which means we've built it at a very attractive cost. If we look in detail now, our acreage is in red, and we're going to look at the acreage position to the south of us because that provides the analog, and that's acreage operated by a company called Saguaro. It is a private Canadian company. I'm going to give you some metrics on that. But the first thing to note is this prediction about liquids yield. The darker the green, the higher the liquids yield. And if you look at Saguaro's position down there, Saguaro is one of the fastest growing companies in the play. We've been able to match some of their drilling results with the predictions that we've made, and I've picked the one there that's closest to us. It's only about 10 kilometers away. We predicted an ultimate liquids yield of 7 BCF and 115,000 barrels of condensate. The actual results reported by Saguaro were 7 BCF and 185,000 barrels of liquids. The predictions have come in quite close. And of course what you're seeing there is actually that we're predicting that we should be able to deliver a better liquids yield from the acreage position that we have got. So let's take a quick look at Saguaro because it provides a very useful analog in terms of scale and performance. Saguaro have developed an acreage position of some 110,000 acres, which compares against our 70,000 acres. Their average cost of entry is around $1,100 an acre, which compares against our $130. They've invested, backed by private equity firms out of the US and Canada, they've invested more than $400 million to date. In fact, it's probably more than $500 million now. They've drilled more than 40 wells. They've put in processing facilities and pipelines. They've grown their production up to around 16,000 BOE per day. It's a fantastic operation. As I said, it's one of the fastest growing plays in the region. They're delivering type curves of between 6 BCF to 7 BCF per well, and in fact, now that they've increased the length of their horizontals from 2,000 meters to 2,500 meters, they're actually up around 8 BCF per well, which delivers a single well IRR of north of 80%. Now that's at today's prices. So that explains why capital is flooding into this play, even in today's market, because you can deliver very strong returns. The resource statement from their acreage position at the moment, around 300 million barrels. Quite a substantial number. And, oh, we're going the wrong way. Of course, when we wrote our prospectus, and we basically invited people to consider that our acreage position was analogous to Saguaro's, the regulator took a different view and said that we couldn't say that, and that we would require an independent audit. So we went to McDaniel, one of the leading resource or reserves auditors in the play, and asked them to do an audit of the data. Now fortunately we have some wells drilled into our area. We have vertical wells drilled in and around, so we're able to look at the penetrations and the logs going through the Montney in our acreage and in their acreage, and we're showing two of the wells here. The well on your left is in our area up in the north. You can see it labeled the Caribou well, the Laprise well in their area on the right. 3 different productive horizons, and of course remember that's what we talked about, being able to do multiple horizontals from one well pad, which all adds to the economics. But the first thing to note in red is the thickness of the pay. The pay in our area is considerably thicker than in theirs, which flows through when you look at the numbers. It's a very dry table. I apologize for that. But if you look at the far right, those are the key numbers, illustrative gas in place. And in the upper Montney, in our area, around about 40 BCF per square mile, as opposed to 19.2 down in the Sahuaro's acreage. In the middle, 40.9 against 27.1. So that led the independent reserve auditor to make the statement that, in fact, our acreage not only compares, but it compares favorably. So what does all that mean, and what is our strategy, and how do we deliver value to our shareholders? One of the attractions of the Montney is that it's an active A&D market. There are a lot of transactions. This is April to July. Those $1.3 billion of transactions, an average weighted cost per acre of $3,700. Our plan forward from here is to go and now drill some wells to prove up the liquid yield in the acreage and then transact. It is a very simple business model. And if we can transact in this range, the acreage, by the time we finish drilling, will owe us $650 an acre. And if we deliver the liquids yield that we expect, then I expect that we'll be able to transact at the top end of this range. So somewhere north of $3,700 an acre. And that, in essence, is the very, very simple business proposition that Calima offers. So we have identified a resource, we will now prove the resource, and we will transact, and then we will deliver value back to our shareholders. Thank you very much.